Today you will learn how to use inducement on the chart, what it is and for what it is needed, because a lot of people get into this trap. So what is inducement? This is a market incentive, that is, an incentive when the price incites you to open a deal in the wrong direction. For example, you have a rising movement and the price removes the IDM in the rising trend. Most people trade according to the classic ICT structure, that is, when the price removes the swing and you think that there is a break in the trend, but this is not the case, this is absolutely wrong. The price will always remove a certain stimulus and go further in the rising direction. At the same time, it will confirm your point of oscillation, that is, the maximums and minimums are true in these places. This will be considered as a boss, a break in the structure in the continuation of the rising trend. This is a boss. On these minimums there will be a chochi, that is, a change in the nature of the trend. Everything is very simple. You just have to take into account the first correct rollback in the market in order to trade effectively. Because all these movements are false bites from the price, that is, it incites you to open positions. Everything is about emotions and animal instincts of a person. The price always incites you, especially at the moment when it has fallen so much here, and you already think that this imbalance should be sold, and the price gives a small correction, but in the end it knocks you up. This is the whole essence of the chart. Let's move on to the real chart. I'll show you how it works. This is our Solana timeframe M5. Let's take for example this starting point, the lowest one. Now we have to find a new maximum for it, which will be here. Because the price removes this rollback. Thus it confirms this maximum. You already have a clear range in which you can trade. But the price goes higher and gives you a correction here. This is also very important, because it is corrected from this block, where most people are trying to sell, but the price eventually goes up. They open positions like this for sale and the snipe kills the long. It goes higher and makes a boss. It updates this high. Let's write this as a boss. Thus it confirms a new minimum here, a new point of fluctuation. A new maximum is confirmed right here, because the price removes the inducement. People start selling this block. But the price first takes out their stop losses for this maximum. But pay attention, this is not a boss, because the price updates it to a shadow. This will be a liquidation. And note that there is no correction in this impulse, so this minimum will be our new inducement. The maximum moves from here to here. And this will be our new boss. We take it from here and it moves here. A new point is confirmed here. A new maximum is confirmed right here, because the price removes this correction again. We see a wave of sales from people. This is a buy and an inducement to the sale. When people start to enter this imbalance into the short. But the price works inside this range. And then it moves to the rising side, confirming a new boss and a new minimum. But the maximum is confirmed right here. It removes the internal inducement again, works within this range, and moves further to the rising side, making a new update, a new boss. And a new minimum is confirmed here. This is how the structure works. You should always take into account such manipulations from the market. When the price removes it, you should also understand that the price can go deeper. You have a certain range, For example, from this minimum to this maximum. You have an inducement here. You have only two blocks in the impulse, extreme and the first post-exim. Everything between them and everything behind them is all traps and liquidity. The price will remove the inducement and go to the rising side, making a buy here in the sale, but it can also penetrate this block and go further below. In the future it will go up from it. But it still works within this range. Absolutely always. This method is much better than ICT, because it is very simple and very effective. People, without even realizing the complexity of this approach, take into account all the terms used by ICT, which are super complicated and incomprehensible. But you use them very simply, because it is all laid down in one specific template of our strategy. Here a new maximum is confirmed. Here we will have a new inducement. Next we see that the price, again, encourages people to sell here, here, here. Here too, the price removes the secondary inducement, encourages people to sell. But in the end it goes to the rising side, makes a new boss here, and confirms a new minimum here. Next we see that there was a new exit up. Impulse, yes. It went down, but it did not take the first roll, which was here. Pay attention. Accordingly, here the new maximum is not confirmed. Do you understand? The new maximum is confirmed only in this place. Here. Because the price removes this inducement. Accordingly, this whole movement will be one internal movement, that is, an internal structure. Let me show you how it looks here on the graph. That is, all these points are your main structure. Yes. Which you use on the graph. All these points, it's all one movement. Like this. That is, you do not take into account these internal adjustments. It's all internal liquidity. Yes, there were secondary trends here which can also be traded. That is, there was a secondary maximum here, a minimum, a new maximum, a new minimum. Why are there new points here? Because the price removes these inducements here, encouraging people to open these shorts here. Do you understand, yes? Thank you all very much, friends, for watching. Like, subscribe to the channel, promote this video. Thank you all and bye.